talk of this further fuel price cut. How probable is it at the amount at which it's being
If I give it in
estimated?
percentage terms, give it a 90% chance. And the reason is this, that our petrol price is calculated monthly according to the oil price, the average oil price during the preceding month, and the cost of things like transport and various other profit margins that are added into it. And if we have a look at the oil price, it's come down considerably. It was only a few months ago, about the middle of the year, it was $110, and it's now down to $85 a barrel. That's a significant move down. And just in the last month, the change in the oil price would save us about 55 cents a litre on the price of petrol. In addition to that, though, offsetting that to some extent is the rand exchange rate, because we pay for oil in rands. We don't pay it in dollars. And because we now need more rands, and the rand has weakened, that would take off about 13 to 14 cents. So 55 less that 13 or 14 gives one perhaps somewhere around 41, 42 cents a litre. So let's just say, to be safe, we should get at least a 40 cents a litre rebate, and that's very encouraging.
It is very encouraging. It is very encouraging, and thanks, for showing us how all of that adds up. I want to go one step behind, perhaps, Ian, and that is, when we often talk about fluctuations in oil prices, talk about the geopolitical conditions of the countries that actually give us oil. What has changed in terms of stability from the countries where we get that oil that is allowing us to enjoy the benefits?
It's a supply-demand factor. On the demand side, the world economy is churning over at a lesser rate than it was, say, a year ago. We were then in a strong recovery. Now we're not. And I think that what we're seeing there is, for instance, in Europe, there's hardly any growth at all. In the US, still a fairly vibrant growth, but less than it was. And China's growth rate throttling back a little bit, still at around 7.5%, and would that we could get halfway there. But yes, so that is it. And in addition, there's a glut of oil at the market, on the market at the moment. Basically, I think a big factor has been the US shale oil. They've discovered huge new reserves, and they're happy to pump it out. After all, it's theirs, and they can bring down the cost of operations in all spheres of activity in the US economy.
I mean, we've often seen over the last couple of months what's akin to this pendulum swinging.
Yes.
We've seen some massive increases and then some massive decreases. Is this likely to continue, or can it get lower, do you think, than this?
It could, but we've had a big pullback already, and I think it's likely to stay, maybe consolidate around this sort of level. The reason it's not likely to go much further down is the Saudis, one of the biggest producers in the world, have actually pulled back their production slightly. So what they're trying to do is to control it around where it is. It's still profitable for them at this level, but there are some producers for whom it is not profitable. So that all that has to be taken into account. But I think primarily the biggest oil users in the world are the US and then China. China has to import a lot, so they're quite happy to see a lower price. The US is very much self-sufficient for energy, and I think will keep it lower to suit themselves.